So you are interested in verticalized AI. So maybe, Alex, you could answer first. How big an opportunity do you think this is? Because I think there's so much going on. People don't know like how to separate the hype from the reality. They don't know how much opportunity is going to be left once Microsoft and Alphabet and everyone else is kind of done doing what they're going to do.
Who are those guys? No, I mean, I think, look, Jeremy and I represent two folks in the Scale team. We broadly are very excited about opportunities in AI. And I think we're excited to talk about vertical opportunities within AI and how we see some of those opportunities developing. I think what's really compelling and interesting to me is when you look at what's happened over the last 2 decades, we really took on-premise software, we moved it in the cloud, and we delivered it through a SaaS model. And that was really lucrative to large portions of the entrepreneurial industry and the venture industry at the same time. When I kind of look forward and say what's going to happen over the next 10 years, that's pretty played out. There's going to be a few more of those opportunities, but we've played that in a lot of categories. And when I see what AI can do and where a lot of the entrepreneurial activity is going and what it's doing, it's really almost like the story of software, cloud software was about the horizontals, the CFO suite, the sales suite, the marketing suite. And now it seems to really be going after the verticals. And it begs the question to be asked why. And I think there's a few different reasons. But one of the simplest is because a lot of the times in AI, you're not augmenting a worker, but you're actually replacing a lot of their work. And so you're taking these markets that were previously a little bit on the smaller side and therefore getting some distraction, right? Entrepreneurs were like, I don't know if I want those markets. VCs would be like, this vertical thing, it's too small. But if you think about any sort of market, it's number of customers, price point per customer. Well, if that vertical application is able to generate 3, 5, 10 times as much because it's delivering a solution and not just attaching itself to a worker like a traditional software, it blows up a whole lot of those markets and I think really changes the size of the opportunities.
How do you choose where to focus? There's a lot happening out there. Jeremy?
Sure. So 2 or 3 years ago, once we saw this platform shift, we started with this exercise where we said, look, think of AI as taking on services labor. And one of our teammates, Jonas, who's actually in the audience today with the long blonde hair in the back, and I worked on analysis where we actually said, look, you got to count the laborers in the different markets, the different verticals. So we counted how many lawyers are there. What is the hourly wage that a lawyer can get? How many doctors are there? What is the wage there? Think about the services, customer support, think about recruiting, think about all the various legal services. And we actually stack rank these verticals. So it's not surprising why are venture capitalists paying these obscene rates for customer support startups, because one of the largest labor pools is customer support, followed by number 2, coding. Why are 8 or 9 companies getting the valuations they are? Because if you count the labor, coder is number 2. So we try to stack rank them, and that allows you to think about how do you price deals in that market and how do you actually choose where do you spend your time.
I mean, the AI agents is huge. It's all anybody can talk about. Customer service. One of your companies, Spot AI, is it Spot AI that does that, or no?
Bland.
Oh, Fixify maybe.
Yep.
Fixify. Okay. I just had looked up a couple of these things, but it's a 1-year-old startup based in Arlington. It provides an IT help desk service that uses human analysts and AI technology to help companies handle employee technical support requests. I think it's interesting, but also, I guess, how do you, especially like pouring over companies at the end of the day with StrictlyVC, they all start to look the same. How do you figure out which is the company, the AI agent company that you want to fund?
Sure, I can start and then Alex can chime in. This is the number one question for all of us right now. So obviously you can take a market size approach, which is count the bodies. Then you can think about how many competitors there are going to be in a particular segment. We're investors in Regi AI. I work with the company in the kind of AI SDR space. And I think you guys are doing a lot of the reporting on just how many of these companies are there. So you have to think about relative size and then what is going to be the ideal market structure in that space. Now, I would say, look, if you look about the sales tech stack in the last 10 years, there are 8 or 10 companies that got to big scale in that space, so you could say it might be able to support a larger number of companies. However, just in the last 24 hours, we've had 2 companies funded just in the trucking agent space. I think you guys reported on Happy Robot, and I think you reported on Vuma. Really interesting, there's 4 or 5 other ones. So you really have to think as a venture investor, if you do the market sizing there, you got $300 million in the trucking brokerage space, how many venture funded companies can really get big?
Well, I was just going to say, Jeremy and I get an opportunity to partner with maybe a couple companies every year, and that's really unfortunate because I think we have a huge enthusiasm for entrepreneurial activity, but it does mean that you have to be incredibly selective, and I think what culturally one of the things that's rung true at scale more so than any organization, other venture fund that I've been a part of, is we really do start with a market-based approach. The metaphor that I sometimes draw with our LPs is if you think about like how hedge funds think about asset allocation, and so each of us has our own personal preferences of markets that we like, and so I may go really deep within insurance or supply chain, transportation, or construction, and it's not ooh, I want an insurance deal. It's I want an insurance deal in the brokerage space that helps people with E&S software. What are the entrepreneurs that are doing any sort of activity in that? And you go really deep in these areas, and it's a little bit like mining for gold. Yes, we're in San Francisco, the obvious metaphor. Half the time you go down the mine shaft, there's no gold there, right? But you just keep going at it, and eventually you find something.
Are there any sort of verticals that you don't think are, where you still see opportunity?
Where we do or do not?
Where you do.
I think we are like, I'm not even sure we've thrown the first pitch in the baseball game.
Is that right?
Yeah, I think, one of the things for all of the enthusiasm, and I couldn't be a bigger believer, and simultaneously I make this same statement, we see so many of these companies, we see their pitches, and then we also get the privilege to dig into their products, their metrics, and so forth. And a lot of times you dig in and you're like, ooh, the vision is here. The actual ability to deliver that to customers, it's like here right now, right? So I think, but you could just see those iterations, and you can see the speed of iterations, and that's what gets me out of it. That's what gets me excited. So I think there's very few categories where the leader or the category has actually been defined.
And so are you spending more time with these companies so that you can gauge the speed with which they are executing?
Yeah. I mean, one of the interesting phenomenons, at least on the app side, is that things have tended to come fairly sequentially, almost based on when users get their hand on the products. So there's been a couple of interesting dynamics. With a new platform shift, I think you often want to start looking what consumers are doing with their own dollars before enterprise slowness enters the equation. So I did a deal in the medical scribing space that actually allowed doctors to self-adopt a scribe solution. And this company, blasted off to the races in only a single year, going 0 to 10 million in ARR. You saw the lawyers who hadn't adopted technology for 15 years. I mean, I've been in venture for 7 years, and legal tech has been where things go to die. Suddenly you have lawyers adopting technology because the incentives have changed on their end. They're willing to make different decisions because if they don't adopt, it's a little bit like VCs. If we don't preempt a deal, our competitor is going to get ahead. If a legal firm doesn't adopt, the competitor is going to get ahead. And I feel in all these verticals, in trucking, in legal, there's so many times when the consumers are racing to adopt out of fear of falling behind. And I never saw that before the last couple of years.
Talk a little bit about human labor. I guess, how are you thinking about that? I mean, it seems sort of like everybody in Silicon Valley says, don't worry, it's not going to take your job, but it's amazing and it's going to change everything. So I think people are a little bit confused. How are you thinking about this?
Yeah, I mean, I kind of think we're talking out of both sides of our mouth, right? Like, there's no doubt that some people are going to lose their jobs. And I actually think pretending like that's not going to happen just does a disservice and makes people somewhere in the Midwest, say very nasty things about us, right? Like, and so in certain markets and in certain roles, you're going to be impacted. I don't know where that's going to be yet. I don't know what those roles are going to be, but I have a company who has no intention to do this, but they're a co-pilot for insurance underwriters. When you, for your small business, want to go get some insurance, you submit a bunch of information, and it helps those people improve their productivity by 10, 20, 40%. Well, I'm sure during the next downsizing, some insurance company is going to be like, wait, our insurance underwriters, we have too many of them because they're 40% more productive now, and they're going to get rid of a couple of them, and that's going to suck for the person who's had that job for 30, 40 years. The flip side is I have a company in the pathology space. For anybody that's ever tried to get a diagnosis on a skin on a skin sample to figure out, hey, maybe do I have cancer or not? Sometimes the turnarounds on that stuff is like a week, right? You're like, do I have cancer or do I not have cancer? Why is this taking a week? There's a shortage of pathologists. We have more pathologists retiring than we have people joining. So it's a bit of both stories, but I do think we should have the conversation around the fact that in certain categories, it's going to impact, the job that people do.
I also just wanted to, since I brought it up earlier, Spot AI. What was so special about this company? So this is a company that, again, I feel like I've seen this story a million times. AI-powered video surveillance platform helps businesses monitor their physical space. Why this team? Because it's raised a lot of money. It just raised $31 million. It's raised $93 million altogether.
It's because Jeremy's involved.
I can speak to Spot. So look, I mean, cameras, we talked about market size. I mean, if you add up the grand total of all the hardware spent on cameras, I mean, the Chinese hardware companies, you can get to billions, like $60 billion. Oftentimes, venture capitalists don't have markets that big. So I think oftentimes, you say axiomatically in software, look, there's going to be one or two winners in the space, and the winner's maybe going to get 50% of the market. I think there was some Stanford research that said that. The number two company's maybe going to get 20 to 30%. What's interesting and what's different about some of these markets, cameras being one of them, is the fundamental hardware is so much bigger that you can imagine not just one winner but several winners. And I think the second thing that they did is they actually just released the very first video agent product. So this is not just cameras, not just software, but this is the idea: if an intruder is jumping over a fence, detect the action being done and make an alerting decision. If, in an industrial warehouse, if an unsafe safety behavior is being observed, record it in a system, send an alert, tell the safety manager. And I think that this idea of agents in the physical world is a little bit underplayed. I think in the last year, the big trends have been things going multimodal. Video and voice applications seem to be where some of the highest growth rates are.
So you said you both greenlight a couple of deals a year, which is, I'm sure that is sort of frustrating. What are you looking for? Because I'm sure everybody who walks into Scale's offices tells you an AI story. So, you said you can spend time with them. Maybe that's how you come to a conclusion. But how do you again? Like, sorry to keep asking this question, but I just think it must be overwhelming to hear the AI pitches right now. How do you decide to pull the trigger?
Yeah, I mean,
What do you want to hear?
it starts with, it's got to be in markets and areas that I'm interested in, right? Like, if I go into Costco on an empty stomach, it's just like bad news all around. And so, it's better when I have a shopping list, and that's how I think about my shopping list. We do generally, underwrite companies post-product market fit, and so we're looking for some semblance of customer traction because that's what we're underwriting, and the more customer traction, but we're not looking for a company at 100K or $1 million or 10 million. What almost all venture capitalists here actually like is first and second derivatives, right? We're looking for the growth acceleration, and so we're buying a future asset, and so we're trying to figure out whether that market is pulling that product and it's flying off the shelves, and the entrepreneur is actually just struggling to keep up, or whether they are going to take our money to try to push that boulder up the hill. I know that doesn't crisply give you the answer that you want, but so much of our questions are oriented around understanding those customers and how desperately and badly they want that product and how much they're screaming for it. And then, of course, the most important part of this business at the end of the day is the interpersonal relationships. You got to make sure that this is a person you believe in, you think is the right person for the category, and you got to have a desire to work with them for the next decade, because that's what you're signing up for. But you should answer.
And I would just say on the AI side, I think you just have to expect. I mean, it's a little bit of circular reasoning. The founders are being told, like, VCs are giving larger valuations to AI-backed companies. So therefore, a rational founder is sitting there and saying, I must pitch an AI story. And it's all a little bit circular, because in 2024, ordinary software growth rates are lower than they've been in the last 10 years. So we as venture capitalists, we have no other choice but to run towards the growth, right? So you tend to be rewarded in a ratio of, 3 to 1, 4 to 1, depending on a moment in time in the public markets, how much more growth is worthwhile. So you run towards the growth, and right now the growth is in AI, but you also have to go in eyes wide open. You have to do the technical diligence. I love when you can actually have someone technical talk to the team, understand the challenging problem they're tackling, and sometimes it's a catch-22. Just because you're tackling such a hard problem might mean it's almost too hard to solve. It might mean the corner cases get you at the end, and then on the other end, in the AI side, maybe something's too easy, and then you run into the problem there's 10 startups. So, I feel like it's the same question every single day.
Maybe one unique thing that's different since the last wave, Connie, is we've hired in the last 2 to 3 years, 3 to 4 technical people who truly have worked with these technologies, because I don't come from a technical background. That's one of my weaknesses, and I think having good self-awareness is really important. And sometimes I can get sold in a pitch, right? Like so many AI, and having a technical person on my side of the table say what they are proposing is plausible or probably impossible is an insight in itself, and then from them getting their perspective around the credibility of the people who are building this at a level that is probably deeper than I can go. I've been doing this job for 15 plus years. I don't think I'm naive, but at a certain technical level, you lose me, right? And so I think we're probably not the only venture fund, but I think that technical talent in this early AI wave is probably more valuable than it was 5 years ago when it was, let's do more CI security or cloud software deals.
We're out of time, but I'm so happy to sit down with you. You're exactly the kinds of partners that we love, because I think this is just as interesting any conversation we're going to have tonight. So thank you so much.
Awesome.
We really appreciate it.
Thank you.
Thanks,
Thanks, guys.